The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition, Monday the 23rd of April. My pleasure to be here Monday, Wednesday, Friday, 11 o'clock until noon Eastern Time. And, of course, we had two fantastic hours. As always, we had Steve Rhodes kick us off right there at 9 o'clock. Tom O'Brien and Steve together at 10 o'clock. Fabulous shows. And straight after me, Larry will be back. Larry Pesavento is back. I heard him back the last week on Wednesday, I believe it was. Was it Thursday? Well, he was back Thursday. Okay, and great to have him back. And let's see, then, of course, today being Monday, we've got Dave White at 3 o'clock till 4 and 4 o'clock till 6. You get a wrap-up with Tom O'Brien. So let's go to the market. This is really an interesting period. The numbers are, the Dow's down 132 at 12,896. The S&P is down 15 at 1362. The Comp Index is down 47 at 2952. You've got gold down 10 at 1632. Silver's down almost $1 at 30.70. Platinum's down 23. High-grade copper's down 770. Now it's down at 362.10. I'm watching this copper real closely. You've got crude oil unch at 103.05, and bonds are up $1.03. Now, this is going to be, the way I'm looking at it is this. Spent all of last week, in fact from the previous week, discussing that this is a diverse market. It is a market that started its consolidation around about April the 10th. That's when Apple made its high at 644, round number high. Within the context of that, we've got a number of stocks so far holding very well, and other stocks have really begun their descent. Would you fasten your seatbelts, etc., etc.? We're going in for the descent. But how we close today is going to tell us, at least tell me, a tremendous amount about whether we've now got speed and time to the downside, just speed, very little time, or whether it's time and a chunk of the move has been done. Let me explain how I'd look at that. When you look at stocks such here on the Tiger TV one, you can see the charts that I look at, that I'm showing every time I do the show. Look at what I'm looking at here. Even with the bad news today, because the market had that very nice rally over the last 1, 2, 3, 4, 5, about 5, 6 sessions, it managed to raise the base. So I said to subscribers, my service is called the Opening Call. It is an extremely detailed look at the markets every single day. I spend a lot of time. I show the charts. I explain on the charts. I not only explain, I do an analysis of the chart, and then I post the chart to another screen, and on that one I add another couple of lines because I want to update it. I want it as current as possible, and then I post it to my site. So from about, it doesn't matter, today it was 6:10, 6:15, from very early in the morning, as a subscriber, you just keep going to my site and you'll be getting all the updates of the information that we're looking at, the stocks we're looking at, why we want to buy, what we're looking at. I had sell signals on stocks that we didn't go short, but it was absolutely imperative that we watch them as closely as possible. They gave perfect sell signals. Some we have, in fact, positions in. One particular short that we have was, in fact, one of the greatest stocks on the market, in the market, for maybe the last 8, 9 years, 10 years even. And now it's under pressure. It is definitely under pressure. It hasn't broken down, but it's under pressure. So I've been saying this is a phase where you can look at stocks on the long side very selectively. In fact, we have a stock, I don't even want to talk about it, but I have to tell you how I go about things. We have a stock we bought last week. We bought 2 positions. One position we're treating as a core position, and it's up quite nicely from that position. Another one we took nice profits on a very, like a 2-day basis. Got back in Friday, took a 30-cent loss. So that took a 30-cent loss out of the $1.67 we made. But the core position is still what we're holding, and it's up. It's up, actually up really nicely so far today. I'm very determined that I want you to be able to look at the market, get the big picture. And the big picture says, be cautious. Especially, and I spent a lot of time over the last 2 weeks talking about the IBD top 20. 50, there's some that are included in the 50, but mostly the top 20. I went through them in great detail. And I've been talking about a price line, PCLN, having probably made a top at that 774.96 area in the daily, and then we got a confirmation in the 120-minute chart that it, in fact, that peak G was the top. And then when it closed for the first time underneath the 9-period moving average the following day, and then again decisively under the 9-period exponential moving average, which was unbelievable support all the way up, what we got was the pattern that I call the dreaded H. Let me just show this. I know a lot of people ask me about my CD introducing the ChapmanWave methodology, and if I'm going to update it. I've done webinars that really update all the moving averages that I talk about and the trend lines, etc. So the moving averages and trend lines that are missing here, no, not the trend lines, but the moving averages, but I go through it in great detail. Now, when we look at a pattern, a particular pattern, view, find, we go to find, and you just type in here, dreaded H or double top. It's just a dreaded H is a double top. And you scroll along and you go to the chapter that says, oops, I went too far, I'm sorry. All right, I won't find it as quickly as I thought. I will just quickly go to it in the chapter, I know it's chapter 17. So we'll scroll down to chapter 17, and there it is. Chapter 17 on the left, these are all the different chapters, time frames, carefully counting the peaks, renaming, restart, the methodology itself, the arch formation, wedge formation. That arch formation is imperative to watch right now. That's what we're seeing in most of these charts. Quite a number of them have broken down like the Qs. Some of them are holding beautifully like the diamonds. So we go to chapter 17, and that says not cup symmetry, an inside wedge, but not overlapping waves, but the dreaded H. And what does that say? It explains in great detail what you've got to look at. Then it gives an example. It clarifies it with points that you need to watch when you're looking at this particular pattern, and then it shows you. Now, there's a pattern that says you can come straight down, and then you try to make a rally. Most of the time, the price only goes to peak A or a B, and then fails. That becomes a B minus or an A minus, because it takes out the left side low bar and then goes down lower. At a certain point, it can even make, and this is what I wanted to get to, a pattern that I call the M formation. Well, that M formation is really important. Why? Because look at this. When you're looking at the price line 120-minute chart, you've just done one arch failure formation, that dreaded H, there it is, went to peak A, B, let me just double check, A, B, failed, let me just make the arch, another arch, and then a bigger one. The pattern that might evolve if there's going to be a sideways move, that's why I'm saying the end of the day is going to be really important, is that instead of touching the 673 level, the 200-period exponential moving average in the 120-minute chart and price line, PCLN down 20 at $690, it will try, in fact, it's a little too far, it's already broken under that, but if it closes under the 699.05 level in this 120-minute bar, then the chances of an M-shaped pattern are very difficult. It's going to make it hard for it to bounce decisively. It can make a little one, but the chances are it's going to try this for the 673 level. You remember when I spoke about Apple? I said, I've got in TradeStation 5 cents higher, but almost every other service has 644 as the top. I've got a peak F top, I said, in my 120-minute chart, and if it closes underneath, decisively under the 9 EMA, the MACD and stochastic will turn down, and this stock at some point very soon will test the gap. And that was the gap at 578. I think it was 570. Yeah, 583.97 to the low of the high of 568.18. And look what's happened. Apple went right down. It went into the gap, had it had an arch formation, that dreaded H, failed. And today, not only is it taking out the left side high bar of the gap, that's that, I've got it here in the daily. That's that level right there, so on the 13th of March, 568.18. It's made a low today of 556.62. And the MACD and stochastic are still turning down. So I went through all these stocks. One of them that was still holding up, remember, I said, oh, this is still holding up. Let's watch it closely, was Alexion. Alexion and then had a peak D with that same pattern that I call the dreaded H. Look at the chart formation again. This is the way it looks. It's that H pattern right there. Let's go up one, the start of it. So in this particular instance, you're looking at the H, and those H patterns can really take time to unfold once you break decisively below it, because you need to come back, try to test the arch formation body, and then fail and retest. If you fail the retest, you go even lower. But there's something else that's really important. When I did my work over the weekend, and I discussed this here quite comprehensively, I said I was a little concerned that the volatility index hadn't dropped like it always does drop when there's a strong market rally. And because of it, because the volatility index had in fact held quite steady in the with the left side, right side price time match, which went exactly to within 1 week of the low of April of last year. That's April the 22nd, the week of the 22nd last year. It came to within 1 week. It went on the 16th of March. The left side, right side price time match that I drew in, I don't know how many months ago, months and months ago. And I said, it's rallying off that. And if it starts to close above the 9-period exponential moving average, I have to respect that as a potential to at least see a market consolidation, or we could be very specific and see a sharp move to the downside in the market. The monthly chart is the one that I said there are periods where you can go underneath 20 in the VIX around about 2021 and stay there for a long period of time, like in 2004, 2005, 2006 until it broke out. But since then, we've only just touched that rectangle formation. You can see the blue one if you're looking at in the Tiger TV. And then you've bounced sharply higher. So this is exactly what we've got to watch for. Very key day coming up here. I'll be back. Basil Chapman, 877-927-6648. Hey, love to take your calls.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, 877-927-6648. Love to hear from you. I'm holding in my hand the 700, and what is this, 700? Oh, well, with the index. Let's go with the index. It goes to 800, almost 800-page tome. It is a book I saw when I was at, there was a really nice bookstore here in Newtonville area, just Newtonville Books, and they've just moved over to Newton Center. They worked really hard just to keep a local bookstore alive, and I think the village really helped them. People went out of their way to buy from them, to buy books rather than go to Amazon, or at least that's the way it seemed. Anyway, I went there the other day just to check out the new store, and right there, staring right at me, was this Frank, the Voice, by James Kaplan. And I started reading it Saturday afternoon. I'm probably about more than a third of the way through. It is such a wonderfully written book. And it tells you about Frank Sinatra. You know, I'd spoken about this a while ago. I spoke about his singing, how he could keep a line going for so long. I'm a professional musician. No, not anymore. I used to be a professional musician. I got a master's degree in music, in clarinet. I freelanced and had my own professional chamber group. So I've always been. I listened to Frank Sinatra and Dean and all these guys for ever since I was a kid. And I'd always wondered how Frank Sinatra could keep the flow. You know, I talk about when we have these long-term buy signals, as we had, say, going to the 2007 top. And I said that there are a couple of indicators that are just holding, like the 9-period exponential moving average or the MACD. always wondered how Frank Sinatra could keep a vocal line so long. Nobody could do it. You never hear him take a breath. And it's part of the beauty of how he did this. It was brilliant. I mean, it was comparable to a Caruso or one of the great opera singers. Here in the book, it tells you he went to work with Tommy Dorsey. Tommy Dorsey had a love-hate relationship. He had that with everybody. And he listened to Tommy Dorsey. He'd watch his shoulders to see how Tommy Dorsey got this mellifluous long line. Tommy Dorsey, the trombone player and band conductor. And that's where he developed this. He said, how does he do it? How does he do it? And he figured it out, and he figured it out. Until he figured it out, then he could keep these lines. And then he heard of, I think Tommy Dorsey said, oh, yeah, he goes swimming. I don't know when these guys went swimming. They used to play until 3 in the morning. They go swimming to develop and stay underwater and hold his breath. So Frank Sinatra started doing that. So those are techniques. Talking about techniques, Steve Rhodes has got a Master Trader series coming up here in the Boston area. And this is a way to learn and develop these techniques. So I'm talking about techniques, Frank Sinatra. To me, that was just a gift because, to read about it and how he got it and to know that I actually identified that he had that, I was kind of proud of myself because it's just, a musician would hear that. So now let's go back to the same, how we look at signals and how we can develop signals in the market. I spoke about the pattern that I call the dreaded H. It looks like a lowercase h, and at the time everybody was long, and I called it the dreaded H because you didn't want to see it break to the left side, and that nickname stuck. All it is really is it's a retest of a left side low bar after a kind of an arch pattern. That's all. And now we've got a huge series of these. I was asking them about Ford, and I've spent a lot of time trying to put this all together. I've been going to real estate, just looking around. I'm everywhere. I got to figure this out. What's happening I'm going to put the two together. Here we go. In the real estate market, I'd say there's a disparity between the prices of the houses and cash flow and rent. What you can get for the rent if you buy a house. And until that disparity changes, I was very reluctant to look at real estate. I was discussing it with someone yesterday when I was looking at a two-family just down the road. And he said he's got clients that are looking to buy condominiums to instead buying two families, living in the one and renting the other, so at least they get the income. When you put it together with that thinking that it is a money plan, it is not just it isn't just cash flow, etc., etc. It's a money plan. It makes sense. Will the price of houses in certainly the Northeast, will they come down to the rents, or the rent's going to climb to go to the housing prices? That's going to be the real big thing. I want to get back to this because when we're looking at the big picture, Ford they're producing fabulous, way better cars than they've ever done. And General Motors, even Chrysler. I'll be back and we'll talk about it. We'll put it right into the market with Ford.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians. Dow's down 144, S&P's down 16. Started getting some email questions for the show. Question about the trend. I'll be right there with that question. But let me just finish this thought. So here I am. I'm trying to put together the Northeast and certainly the Boston area. But I've been around, so I'm talking about the Northeast itself. How are the prices where you're starting to see bidding wars? How is that? How can you put that together to see whether or not there really is going to be another real estate, huge leg up in real estate? Whether or not Ford, Chrysler, and General Motors have turned the corner, they certainly have in product development and product improvement. I still don't see yet when you sit and you close doors of a BMW or Mercedes that the Cadillac or the Lincolns are at the same level. I don't feel it yet, and I haven't compared driving. I will take a weekend one of these days and just go to these different places and drive all the different cars, try to check them out like that. But how can we be getting for the first time quality here in America that isn't recognized by price movement? It can happen. It could be that rug pull where you finally get it right, but hey, the market doesn't care because we're in a major bear market. Or we're in for a spectacular period. I'm in the middle right now. What I'm saying is that I think we've started like 1960s to 72, where 1,000 was the limit. There was this huge trading range. I think we're in this big trading range with the potential to get up into the high 13,000s, maybe miss the 14,191, whatever it was, high in the Dow. But I want to see that Ford and General Motors, I want to see the sales improve here, not just overseas and in China and other places. So I had a question to Dan. Where would one add to Ford if they have a position? Well, the 9-period exponential moving average in the weekly chart is at 1107. It went down to 1115 today, but the week has barely begun. The MACD is actually not bad. It just has crossed negative, but it's holding quite well. The stochastic is terrible in the weekly, and I'm afraid that if the day in the monthly, there's that pattern, the dreaded H pattern that I was talking about. To avoid that, Ford cannot in the next 2-3 weeks close under 1055, 1050. Close under there on a monthly basis. I'll be very concerned. But hey, if by the end of this week comes the end of April, beginning of May, you can see Ford bouncing into the 1220 area, I would say, that's good action. Now you've got the autos. GM would have to also be doing the same thing. GM would have to be rallying back from the 2310 level it's at now into the 2450. I would even say 2530 area. And then that 200-period moving average for General Motors is at the top. It isn't support, it's resistance, but it's up at 30.25. So the question, where would you add to Ford? I would just have to say, I could give you a technical reason why right now you get a rebound, but I suspect that I'm going to have to wait to see how that 1107 level on for the whole week, how it manages to stay. If the Dow, now I'm going to give a market overview. If bonds, I spoke about the Japanization of our interest rates. The TLT is in leg E. That's the way I'm counting it right now. Bonds are at, the TLT is at 118.09, and there's a bounce here which says this is that pattern that I spoke about, the dreaded H, the left side, right side. Here's a price time match for the 109.82 level in the TLT weekly back on the 28th of October. It runs up. It doesn't go to the previous high of 125.03. It goes to 124.02. Then it turns around and makes an arch formation, and in a price time match, it touches the 109s. It goes to 110.20 area on the week of the 16th of March, and then 1 week after what I call the left side, right side price time match, it goes to 109.69. It breaks the previous 109.82 low. That was very important in October. And what does it do? It closes above it. That says that the price in this dreaded H pattern, if you read about the whole context of it in my CD introducing the ChapmanWave methodology, it says you can rally. If you go underneath, you can rally too, but probably not over the previous high, which in this case is 119.14. If in fact the price does, and you've got a buy signal from a smaller time frame, which you've got now in the daily, if it does power high and closes decisively over that peak, which would be 119.14, look to the left side, because that would be your next target, 120.91. So let me clarify that. That's my market perspective on bonds. And if the TLT breaks and closes decisively higher on Friday, this coming Friday at 4 o'clock, and is well above 119.14, start looking towards 120.91. That's number one. Number two is the TBT, which is the 200% inverted price movement, ultra short, what is it called, Lehman 20-year T-bond fund. Went to a peak C, it's pulled back, it'll start to fail with that same dreaded H pattern in the weekly if in fact it takes out, tell you right now, the low of what has done that? It's taken out the low of 1859 from the week of from the 6th of March, but the level to really watch is 18.38. If it closes under 1838, look to the next left side low bar of 1804. So those are the parameters I'm looking at. Now let's just go back to the Dow. I could do the S&P, but I'll do the Dow first. INDU. What I'm looking at here, that same pattern, that arch formation, and then this another little arch making an M-shaped pattern. I've got to watch this closely, because if the Dow closes under 12,800, say by tomorrow afternoon, that is very negative. If in fact it happens to if it happens to bounce by the end of the day, it's only down 68 points. S&P's down 7.5. I would then say, be careful, because we could be doing a sideways consolidation. The rotational aspect says you could then go sideways in the Dow, down in the Qs, because it has all those IBD stocks that are involved. And if it's messy, let me just clean it up. There. In the Qs, the trust, the PowerShare Trust series, they're trading at 64.75, down 93 right now. They've jumped over that line of 65.24 support, under the line, I should say, and in fact made a low today of 64.49. That's 64.49. Now look at this. In the weekly chart, it says that there's a chance this week that the Qs, for the first time since, this is amazing, first time since December, end of December, that the Qs have closed under the 9-period moving average in the weekly chart. If it does it this week, if it closes under 65.37, hey, this is even more important. Remember the weekly chart? There's a technique that I teach in my CD introducing the ChapmanWave methodology, and that is, if I can find it, channels. Channels. Now, there are channels that can be formed. Where did that come about? Oh, that was just something different. There. Channels can be formed. Within the channels, I love to put a dashed line. And that dashed line is what I call an inside track. So you can see, if you're looking at Tiger 1, look at this. You've got this red line. This is deer, going back to 2003, 2004. An up channel, beautiful up channel with little falling axes and all sorts of things within it. That wasn't the point of this exercise. It was to show the buy mode going to a peak D and then to a peak E. It was to show the sell zone. Sounds like a cal zone, but it's not. It's a sell zone that has the strong red line. If this price had to decisively break above it, like the GLD did in the weekly chart, like Apple did in the monthly chart, it says it's going higher, but at some point it'll come back into this channel. This dash line is where it always turns around, and that's exactly what it did. Look, this is the support. When it gets to the bottom, you can always buy it, because all you need to do is put a stop and a close below that green line. So I now actually do the exact opposite. The development of the ChapmanWave, I'm always trying to develop it to make it visually clearer. I now put a green line at the top, because if it breaks out, that's really positive, and a red line at the bottom. So now let's see what's the context that we put this in. There it is. The green line at the top, because the Qs did not break above that green line, which has resistance, went right to the line, to the exact point of resistance, broke underneath the red line this month, April, but month is not finished. We don't know where it's going to close. Where would it test if it was to go sideways to down? Major support would still be around about the 59.65 area. Maybe, let's see. Well, it's moving to the right, so let's call it 60, right about 60. That's far down. That's 5 points down. But this is what's really important. That 9-period exponential moving average at 61.07 in the monthly chart, that's what we'll be looking at closely. So putting it together, it says that the rotation could say those stocks that were in the IBD top 20, which are many of the NASDAQ stocks, what was it? That's how Lululemon is doing. Lululemon is pulling back. There's that pattern we spoke about. Patterns repeat over and over and over. You'll see them. They are, not only do they do that, they are fractals. They can do that in any time frame with the same pattern. So this went to peak A to peak B. Lululemon trading at $72.50, down $1.20. If Lululemon closes under the low of the 10th of April, 71.26, what will it do? It'll start to break down. And now, this is a very interesting thing. I have Lululemon in my, I suppose I could call it G. I don't know what to call this weekly. I've got it as a B. Everything about it with the MACD and stochastic said B. I don't see how Lululemon can actually go higher. It's only a clothing store after all, athletic equipment, women's fashion, Lululemon Athletica Inc. Maybe it's not just women. I don't get anything there, so I'm not sure. But I've got a D and then an E in the monthly chart. I'm going to go with the monthly, and if that monthly closes under the low of March, if it closes under 65.18, Lululemon is in trouble. But that's what I was saying. So on a rotational basis, you can see that there are some stocks that should do very well. Let's just look at the HGX. HGX is, in fact, 877-927-6648 is the number to call. Now is the first time that I can put the down arrow in the weekly chart of the housing index. You could still go higher, but I have to go with my rules, which say the stochastic went down under 80%, and it was last week the MACD did cross negative. So that says to me, I've got to watch closely, because even if it's just an intermediate term pullback, short term to intermediate, let's just say 3 to 5 weeks, that's going to be serious, because basically the financials and the home builders were doing quite a bit of the leading to the upside for a while. Then the home builders started to pull back, as well as the XLF. So now let's look at the XLF, because if the HGX, the Philadelphia Housing Sector Index, closes under 117.04, it's bound to test the 115.14 level, or get close to that, the low of March. So let's look at the XLF. And the XLF says it is about to do that same pattern. There's the trend. Folks, look how many times, just any chart you want to pick up, we've looked at this as a counter-trend rally. It's really what I call a right shoulder failure pattern. And that right shoulder failure pattern coincides with the ChapmanWave dreaded H formation. And let me just go to right shoulder failure. That's chapter 21. And look, this is the whole thing right here, chapter 21. So that's all about the right shoulder failure pattern. What does it look like? There's the dreaded H. So it fits. So I'm looking at the housing sector index, and I'm saying, all right, got to be careful here. Whoops, it was wrong. Let me get back that chart. Here we go. So in the den, I had a question. AMRN. Amarin, was that way? That's Amarin Core. That is trading now at $10.11. Okay. Now, this is a pattern that I've seen a couple of times lately, where it's a high-level consolidation. So let me explain this visually for those of you who don't have the chart. AMRN is trading at $10.11, up, down 29 cents. It's had a little bit of a rally from the low in the same pattern that I've been talking about, but in fact it's a little smoother than the others, and right now it's holding really well compared to the rest of the market. There must have been news from the low of $7.01 on the 13th of March, because it went up 1, 2, 3, doji candle on the 4th, and then strong 5, and in the 6th session started to turn down. This is a pattern that I call a single leg A up syndrome, but there are two scenarios. The first is that it goes straight up and then straight down in what I call the Eiffel Tower pattern. It looks just like a capital A. But then it pulls back. But the other scenario is that if it pulls back and then holds, I usually like to think it like 66 to 70% and holds strongly, it could have a very nice bounce and say that that was a prelude, that opening rocket ship to the upside was the start of a move, and now it has to consolidate. Well, that's going to be interesting, because AMRN, I would say if you're holding it as a core position, I would just be really careful and take quite a bit off if it closes under 9.30. It's at 10.11 right now. But if it holds today and goes to $10.63 by Wednesday, that's really nice action. I'll be back. Basil Chapman, I've got a couple of questions that about
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman. We're going to I'm going to do 2 things right now. One is I had a question of the den about UTX. UTX has pulled back very sharply from the 8750 high. There's that pattern, that same dreaded H, lowercase, looks just like a lowercase h. If you're holding UTX and it closes under 72.93.31, 79.31 is the 200 period EMA. If it closes under 79, watch out, because that 78.35 level is really critical. If this week UTX closes under 78.35, then you're looking at this downtrend line, which says that the next area of support will be 70s, around about 77 to 76. You want to see UTX in the next 2 days struggle. Okay, how it does, it's got to struggle to get over 80.62. So that was that. The other one was a quick thing about the TRIN, the short-term trading index being this high. Yeah, there's a question. It went to 315 so far. 315 is the high of the day. That invariably says you gotta watch, because there's a chance you get a pretty nice rebound at some point within a day or 2. I'll watch that. That's part of my ChapmanWave TRIN index, but I have to wait till the end of the day before I can see what happens. Now let's go to our first caller. We've got Celeste in Boston. Hi Celeste, how are you?
Hi Basil, thank you for taking my call.
My pleasure.
I wanted to ask you about the VNQ. I have a bunch of shares in this long term.
This is the REITs, the Vanguard REITs?
Correct.
Okay. Vanguard REIT ETF is VNQ. Actually, I hadn't seen that before. I just quickly did the notation. It corresponds very well to the IYR. Mm-hmm. And the IYR, actually, no, it doesn't. It's even stronger than the IYR. That's interesting. I'm going to go back to that. Okay. Do you use the IYR as some kind of a proxy, or you just look at this particular index?
No, I just actually look at this, and I follow Simon Properties because it's 10% of this.
Very good. Okay, I was going to say to you, check out, because I did some work on those properties. Another one that I also look at is the RQI, which I can't remember. I think it's RQI to go with it. Let me just quickly look. What is the RQI? I follow these by letters all the time. Cohen and Steers Quality Income Realty Trust. So, and they've been doing really well. So now this is what I'm going to tell you. Based on, I'm going to go to your particular thing, which is the VNQ, and I'll do that. I won't do the IYR since that's what you're looking at. In the long term, I need to see certain parameters either broken to the downside or upside to be able to change my opinion right now that says that the monthly chart so far is still holding very well. So this is what I'd be looking at. If at 62.95, if VNQ starts to pull back and by Friday it is looking like it's going to close under 62.47, I don't know how much or what part of your portfolio it is, but I would say to you that if it closes under that, I would take a little bit off, at least take something off. Why? Because the candle of 3 weeks ago down at 60.84, that's liable to be tested.
Okay.
So that's the way I'd be looking at it. If somehow it survives as an alternate, this is that rotational part that I'm saying that might happen here. If the rotational part says, hey, I'm not going to pull back with the market. I'm going to hold that 9-period moving average in the weekly chart, which is at 62.70, and it manages to close at 63.30, you're still holding it, and that's the way to go. So those are the levels to watch.
Excuse me, you have it on an A on the monthly?
On a monthly, I have it as a question. I've got a couple of charts that have broken out.
Yeah.
I just don't know what to call it. I've got it as an alternate, either a D or an A. I'm going to go with the more conservative D right now, a D/A, as you can see if you're looking at Tiger TV. And I don't want to get into the monthly right now because it's holding the 60.39 period moving average so well. I don't really want to do anything. I don't want you to jump out of it too prematurely. So
what I was going to do is take a little off the table if it filled that candle that's all the way over there on the left.
Okay.
I think the month of 9/18, September of 2008.
Whoa, that's way down there at 47?
No, above.
Oh, above. Okay, yes. Okay, I see. Okay, yes. That kind of corresponds with what I'm looking at. Yes, and then start taking a little off. Thanks for being here.